Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 18th, 2025. It's 11:43 a.m. Eastern Time as I'm starting the video. So we're a little over 2 hours into the trading day, and what I'm going to do in this one, as I said I'd do earlier, is cover trade idea, update on the trade ideas on the site. And we're going to do the longs in this video, and then I'll do a follow-up trade on the shorts. I continue to maintain that this is, in my opinion, pretty much at all points in time, but now more than ever, a great time to run a diversified short portfolio. Even as a swing trader, of course, investor, that's critical. But being long the most bullish setups and short the most bearish setups, not just in the equity markets, but of course there as well. We're seeing a lot of disparity. Certain sectors doing very well, other sectors and stocks doing very poorly. So again, I'll do the update on the short trades and highlight some of my favorites in the next video. And then this will be the long trade ideas. And then that holds true as well for commodities, as I mentioned in the previous video today. For example, short, the most bearish and long the most bullish, and some of those have nothing to do with one another. For example, live feeder cattle have nothing to do with natural gas or crude oil or gold for that matter. So, and the same thing in the stock market. Stocks, yeah, all ships tend to lift. All ships are lifted in a rising tide, they say, but that's not exactly true. It's not literal. There's always, at any point, even in the strongest bull market or the strongest bear market, there's always stocks going against the trend. So that's what we do here. Anyway, and by doing that, you will, in my opinion, vastly outperform the broad market, whether it's going up or down. And of course, I'll always start out in most of the videos covering the broad market because that kind of shows us which way the tide is going at that moment. And so therefore, you can, whether you want to trade the equity markets or just align your trades with it, that's it. And of course, short trades are going to play out a lot better. They're going to do better, move to go down faster in a downtrend or correction or bear market, just like long trades tend to outperform in a bull market. So, all right, before I dive into it, a couple points. I continue to err towards or have a preference towards bottoming plays. Right now, there's a lot of stuff, and if you're wondering why, I'm not long Nvidia, well, we're short actually. That's been a short trade I did recently, or any of the high flyers. Again, for the number one reason is any stock or any security, futures contract, commodity that I trade, I have to have a case based on my style of trading, my technical analysis. And so when things are just running away in a parabolic move, sure, you can be in there and take it, put a stop loss, trailing stop, and let it run. But I can't sit there and make an objective case based on the charts to buy, and it's hard to get price targets when things are at all-time highs. So I just wanted to share that. This is my style. I catch turns in the market by using technical analysis. Pretty much, catch bottom plays, topping plays to short, bottoming plays to go long, or stocks are in a current trend, buying pullbacks to support, catching bounces, rallies, or new trends, and likewise on short trades, shorting rallies into resistance. So with that being said, I'm going to dive into the updates here, trade updates. From time to time, and I don't do a great job on this. I focus, most of my day is spent trading individually. When trading's, well, sometimes I'm actively trading, sometimes I'm just watching things and sitting back, but I'm always poring over the charts. If you're wondering what's between the hours of when those updates come out, there's days that I'm firing out updates one after another with you, 4 or 5 posts a day, and then there's days that there's nothing in the markets going on, or nothing that I see. I mean, there might be something somewhere, but if I'm not seeing anything, I'm not going to waste your time or mine putting a post out there to tell you that I don't see anything, there's nothing going on. Okay, so that's why the frequency of updates and posts will vary. All right, let me dive into the charts. Now, from time to time, I like to update the trade ideas. Sometimes they can be months old. You can sort these by date. Now, date will be the most recent time that I updated or talked about any of these. I have a symbol tagging system created years ago. I love it. When you click on an individual post or look down below here, and you'll see it. If you open these posts, you'll see at the bottom. So, for example, well, let's find a video where I covered a lot of stuff. Where I'm in a trade idea category, so these are more limited. But you can see down here tags right there, UPS. These are hyperlinks. If you hover on them, you can click them, and then that'll load all the previous posts on that particular tag. Now, UNG, NG, that's the futures. There's the ETF or ETN, and then the $ nat gas, all the same thing. So it'll pull those posts up on natural gas. This will pull all posts on UPS. That's how that works. Now, when you go up here, so you still have the link, you can click on these links. It'll bring up all the posts by UPS. And it will also, you can sort them by date, or you can sort by symbols. It makes it easier if you're trying to find something. So let's leave it by date right now. So I'm going to go over these, and from time to time I will come in and update. For example, copper. I'm going to pull that out after this video. Copper already hit its final price target just recently. And so after this video, I'll go in the archiving system and just take that. All trades, whether winner or losers, they get moved to the completed trade category. Sometimes I'll do this in the video. Sometimes I'll put a front page post when something's completed. Sometimes they're shared in a video, which brings me to the next point. This list is not all inclusive. In fact, it's far from all inclusive. The majority of trade ideas that I share on this site are done in these videos. And the reason is I can be a lot more efficient when I cover a sector that I'm bullish on or bearish on, and I might cover a dozen or more stocks, which I often do. Any or a lot of which will be trade ideas, and I'll always share my favorites, my top picks, the price targets, objective entries. And again, it's a lot more efficient to get trade ideas out to you that way, and it would take just a lot of time and kind of pollute the site if I had screenshots and posts on every single, like for example, if I go through the gold mining stocks, I can't possibly screen chart annotate. It'll take me a day to do that on all the charts, and then to keep doing that and update. So it's much more efficient in videos. So with that being said, this is not all inclusive, but it is an area you can go to check on some of the, not all, but some of the trade ideas that are currently active. And again, if you see one and you click on it, and you'll see I haven't posted an update on copper since August 12th, but it already hit the price target, final target, a few days ago. So I'll get to that in a second. So for right now, I'm going to start the video doing what I do, sharing a few trade ideas that are not on here, one new one and two that I've covered many times in the past, but in videos. So I'm going to start there with the new trade idea that I'm liking, and I will probably put a chart out with some targets on this soon. This is MKTX. This will pretty much trade with the long bond or bonds in general. They're in the capital market sector. It's electronic. They do electronic bond trading. So when there's a lot of, typically when, here, let me just show you instead of telling you. Typically when bonds are rallying, so we'll pick TLT here, the long bond, this stock is going up. It's a very tight correlation. Why? Because that means typically more volume. Bonds usually drift down. Sometimes they can be going down on a lot of selling, and this MKTX is still making money on those trades. But for whatever reason, you can see that very tight correlation. I just overlaid. The white is TLT, the price of the 30-year bond, and come on, you can't argue that. And so sometimes here, peaked here first, TLT was dropping, MKTX went up a little more. We've had a lot of trades. I've traded this stock over the years, probably with about an 800% or better success rate. Trade ideas on this one. And I lately, as you know, I've been kind of watching TLT. I did throw it out as a trade idea the other day, fade trade, short trade, but more watching it for a tell on the markets on where it's going. And I've noticed this disparity here. We had this big rally in bonds, but MKTX did not respond. It's been on my radar. I've been watching it. One of the reasons that happened is they just recently, every couple times a year, whenever it is, they rebalance the S&P 500. This stock and some others was jettisoned out. And when that happens to a stock, when they're getting dropped out of the S&P 500, went into another index, one of the Russell, not 2000, the Russell 400 or one other index. What happens is that once they get word, whether the word it's official or even the rumors that they're going to be jettisoned out, you'll start to see the stock drop. And so that also creates some value, because what happens is remember that there's the S&P 500 index funds are the biggest in the world. There's just massive amounts of money. It's the most popularly indexed and popular index that's indexed with mutual funds and ETFs. And so by being added is a huge boon to those companies. When word is that they're going to add it, you get they get front run by institutions and individuals. They'll buy the stock knowing that now it's a component of the S&P 500. And so when the S&P goes up, you're going to have every dollar that goes into an S&P index fund in your 401k, or you're buying SPY, a certain amount is going into that stock now, and vice versa. Now, that's a double-edged sword, guys. Just keep that in mind, too, with these heavily indexed stocks. When the tide changes and the S&P is falling and money's coming out of it, the whole thing works in reverse. And if you've ever wondered why bear markets are so vicious, that's it. That whole trade, same thing happens in reverse. And so as the indexes fall, people start selling, and then the indexes, it's a vicious cycle. They have to then sell what they hold, and proportionally. So, all right, with enough of that being said, I just wanted to explain that there was, a fundamental reason for this drop lately, and as I just showed you, a very stark disparity on treasuries. As I covered in the video earlier today, treasuries have broken out. TLT broke out of the downtrend line, which is net bullish until and unless it fails. But again, I'm a little suspect about this breakout for the reasons I mentioned before. I showed you the same thing what happened a year ago when we were heading into the first of several cuts on a Fed cutting cycle, and treasury bonds rallied leading up to that, but then sold off after. So again, I don't have strong convictions, but if this breakout holds, and if you want to take it on face value, it's a breakout. If it holds and it goes up, there's going to be a game of catch up for MKTX to play. So that's it. So this is a trade idea that I wanted to share with you. This is my weekly chart. I can make a case to buy it now at or very near that long-term support about 172. I have it at 172.58, give or take. So consider this a long trade idea now. I'll do updates. I'll get charts out to you with targets. I think now, maybe a partial position. And as soon as I think the selling has abated, and they already reported earnings, so that's out of the way. And again, I just showed it to you at long-term support with positive, aka bullish divergences on that weekly chart I just showed you, as well as this daily chart. And that's where we typically buy it. We bought it right here on June 6th. And this breakout and back test would have been the last time, or maybe I'd give it to you along here as well. I don't know. You can just go to the site and go to resources and pull MKTX up in the tag. Once I add it to the long trades, if I do tag it and put it in the long trades, I'm going to explain on a second why some of the long trades don't show there. Then you can click that symbol tag that I just showed you right here in the long trades. All right, so target-wise, again, it's a kind of a soft entry in my opinion right now, or you can wait and see what happens with treasuries and what happens with this stock, or if you want to be safe, wait for a break above this 192.61 right here. That will make this whole thing, which again was induced largely by the stock being jettisoned out of the S&P 500. If it regains that level, that's a technical recovery. Right now, this is a breakdown to new 52-week or multi-year lows. Fewer things are more bullish than a false breakdown. So if it can solidly get back above 192.61, that's going to be bullish. You'll probably see a lot of short covering, money coming back in, especially, again, this is like trading GDX without, you got to keep an eye on gold. I'll only short gold, GDX, or go long GDX if I'm bearish or bullish on gold. I got to make a case that gold's going to rise or fall because GDX is going to follow it. This same thing with treasuries. So if treasuries go up, I can just tell you right now, eyeballing this chart and that wedge, that's a minimum swing target right there. And that's going to give you, from where we're at now, about 25%. And the trends in this one, you can just eyeball them. They're usually twice that. And again, we've traded this sucker long and short over the years. And so this is the next long entry. Two others that, again, I'm going to explain why they're not in here and why MKTX may show. I have to put an individual post on MKTX with a chart, which I'll try to mark up soon and get that out to you, and then I can tag it that way. But what happens in a lot of the trade ideas that I share with you, such as this one, for example, I'm going to update SWBI, Smith & Wesson Brands. This was, I've shared this at least 3-4 times with you recently, updated it, made an official trade idea, told you I could make a case to enter it right there on this video, which was on July 15th, and I've covered it several times. However, I did it in a video with multiple trade ideas. Some are long, some are short. Some are not are just coverage. They're not even necessarily all trade ideas. Some are just coverage of a sector I might be watching, but not engaging or trading. And so therefore, if I add that in that video, and I can't categorize this as a long trade idea, even though this was a long trade idea, because all of these symbol tags are going to show up in that column here, and it's going to get confusing. So that is why, again, this is a guide. These are some of the ones that, especially the ones that I've posted a chart individually, and I could tag it and put the category as a trade idea down here, active long trade, and also tag it that way. So hopefully that makes sense. This is my tagging system that I came up with years ago, and it's as best I have. And so you're going to see, I'll go and update those two for you now. So SWBI, and then the sister trade I followed up with was Ruger. I highlight it right here and several times since, one of my top picks. And I've updated it more recently, telling you we hit that second target, which is the intersecting downtrend line, 979 resistance plus the 200-day moving averages. So on a scale 1 to 10, that was a 10 for where you'd expect a reaction. We made 20% on it so far. There's the reaction. I always say a reaction can come in the form of one of two ways, either time or price. This is more so, although there's been a pullback from the level, right back to that 923 target, which was resistance and now support. That's the bullish of the two. When you have a reaction like that, yeah, you're giving back price. When you hold up price, that's more bullish. So what this is the odds were highly favorable that you wouldn't go right through triple resistance. Again, price, trend line, and 200-day moving averages. The odds of you going right through there like they're not even there, like a hot knife cutting through butter, are very low. It does happen, but it's very low. So there's that reaction. Now, my point is it's consolidating. And so the next breakout above that level, and especially now that you've already had the consolidation to help alleviate some of those overbought conditions. See the RSI, we were very overbought when we got there. We could quick 20%. You could hold the position with stop somewhat below, protect profits. You want to at least have a stop somewhat below that 923, the tightest you would have it. Maybe we pull back and come back in. There's plenty of support down here. But all I can tell you for sure is the next buy signal is going to come on a break above that triple resistance level, or you can see the 980-ish target or the recent highs, all the same. And then these are my next two targets right there. It's sister trade. Again, I cited the fundamental reasons as well as technical reasons when I covered Smith & Wesson, as well as Ruger, which I followed up with. Again, Ruger, I came afterwards. I know we weren't in right at the lows, but I did follow up, and this is those are the two big U.S. gun makers. And for, again, the reasons I cited in those videos, you can just click on the symbol tag links and pull them up. But Ruger's been up 24+% off the lows, took out my first target. And there's an example. We went right through, we went through the 200s and the downtrend line, and we're above them. That's pretty bullish. So now the way this works is, if you want to add to it, if you didn't take it, you want to get into it, any pullback to T1 will be the back test of the downtrend line. The 200-day moving averages are just below it, and that price resistance I had at T1, 37.12. So we'll call it about $37. That would be an objective entry. Stop somewhat below. You have a little trend line here. That was resistance over there. Now that's support. So, at most a stop somewhere there, maybe a tighter stop, up to you. And these are still the targets that I gave you there. So we're doing good on that one as well. All right, now we're going to go through these just in order as I have them here. And remember, due to my symbol tagging system, a lot of these symbols, it's the same thing. UNG is the ETN or ETF for natural gas. NG are the futures for natural gas. And then $ nat gas is the continuous contract for the future. Sometimes I'll reference that chart on another charting platform. And So that's the long term, what they call the continuous contract, and then the most recent contract we're trading. I'll show on NG. All right, so we're going to go in order here, and I'll go through all these. Again, some of these have already hit their final targets or stopped out maybe, and I'll cover that in this video, and then we'll remove these. So let's dive into it. First one up, UPS. UPS right here. Recently highlighted this as a long entry here at support. I believe it's also long-term. Yes, it is. Very good long-term support zone. I still like this one. Again, these are a lot of the trades. Some of these we've closed out successfully recently. Pepsi and UNH, United Healthcare, and others. In fact, because UNH, I removed it from the official trade category because we hit what I had as the final target there, but I had arrows when I first, we went long here, we made whatever it was, we went long on the breakout. I highlighted pre-breakout, this stock went up 45%. When we hit T3, we're up 32. And then I said if we entered, I had arrows in that initial post that if we entered the gap, we could go up there and go up to 379. So that's still potential there. So, but again, these are, as I've been mentioning, the plays that I'm more comfortable with. These blue chip, well-known brand name, well-established, mega or large cap stocks that have a lot less risk, and those that are beat down. Because if you're in a bull market and things start getting frothy as they have, I just showed you yesterday in the video how most of the Mag 10 or 8 stocks are stalling out lately. And I said, hey, that's healthy for the stock market if it is sector rotation, where people are taking profits, institutions and individuals taking profits on the Metas of the world and Nvidias, and then moving into these guys. And again, this is where we're just blowing the market away performance-wise by going with these stocks. There's just way better RRs. It's not to say everyone is going to play out. It just means if you use appropriate stops, your downside is minimal compared to the upside potential. And so that's UNH still in that gap right now. Made it about halfway there, pulling back to this trend line right here with T3, that 326.37-ish price support just below anything, and then a little gap there. So stop, if you're still in this one, somewhat below 320, not too much, is where I would give it. No reason to get back nice profits on a trade like that. All right, next one, UNG. I think I just updated that for you today in the previous video, but I'll do it again. Breakout right here. Went up, stalled out around that second resistance level, pull back. As I mentioned, it needs to take out that recent previous high. Now we have 2 reaction highs there. So far, you have the makings of an uptrend. You have higher lows and higher highs since the breakout. And so this is when you want to buy it, either on a pullback or, meaning a little now and a little more if it breaks that recent high of, what's that number now? I'm gonna move this R2 line up, just might as well use that, because now that's the resistance level, about 1345. So you set a price alert. If it breaks that, that's bullish. Your stop would be dependent on your entry. We entered on the wedge breakout or just before it, and that's that. So next one up, wheat. Wheat is a sister trade to corn and soybeans, the 3 big grains. This is my 60-minute chart. We're coming off that divergent low right here, bullish falling wedge pattern. R1 is the big level. This is what a last update I would have given you. This is a resistance zone. We need to pop that, and so far looks good. It's pulling back today, but it needs to take out R1. I think, well, I still very much like this trade. I know it just can't, it gets these little fits and starts on the 60-minute chart. We've had some nice swing trades. We've hit targets and it pulls back. But long-term charts still look constructive, very much so in my opinion. And the 2 trades, I'm just going to jump ahead to them because they're very much related, corn and soybeans. They're also doing, better. They're moving up. That's Cron. Sorry, a little dyslexia thing going there when I was typing. CORN broke out. This is a daily chart. Divergent low, breakout of the wedge. There's your downtrend line, bullish falling wedge. There's a little uptrend line. It's walking up now. 60-minute chart right there. There's that wedge breakout. So corn in a near-term uptrend, trying to bottom just like wheat, in my opinion. And again, this is a long-term daily chart. We made a marginal new and slightly lower low, but that was a false breakout, aka bear trap. A bear trap is when you break support. They call it that because the bears pile in short, and then they realize when it comes back up, the breakout failed, didn't stick. A rut row, that's where their stops are, and then they start getting stopped out. And when short sellers get stopped out, they buy. They buy to cover their position. That's how it gets closed out, and that's buying pressure. So that's positive sign charts. And again, corn is a competitor, if you will, or an alternative to wheat. We say that, go in your favorite Mexican restaurant, order the tortillas or the fajitas. They're going to ask you if you want corn or wheat tortillas because you can make them out of either one. So only stands to reason if corn goes up 50%, you're not going to see wheat going down 50. You're going to see it kind of coming up, and they're both grown in temperate climates too. So there's that whole thing there, similar. All right, there's soybeans, big basing pattern. We already hit my first target. We hit my first target again. We just need to pop that level, and then that'll open the door to these additional targets. So still like the grains. They're not going anywhere. It's been a dead money trade, but the charts are still constructive. That's all I can tell you. All right, so next up, LIT, lithium. Lithium just recently, as I highlighted, hit the fifth price target. Trying to remember if T1 was here. You can go click and see where it was first mentioned, somewhere in here, either pre or post breakout, and that's good for about a 40% gain. So I'd say since June, up 40%. I think it's fair to say that that's outpaced the broad market. The stock market making new highs, which is being cheered for every day. But like I said, we're, if you look at the stock market, the broad market, we're from where we were. Even if you go back, you go back to June or July, it's up about 6%. So, all right, next up. Let me go back to lithium. I'm sorry. I had a final target of T6. I'm going to give you right now, I can see a little bit of a trend line forming here. This one might be it has the potential to burn through these divergences. It almost has so far. That would be near-term bullish. So look, if this one does pull back, this is the primary uptrend line right here. And there's T3, and there's T4. T4, there's actually a gap here. So any pullback in this area would be a objective add-on or re-entry point. Anything much above that, you might want to stop, especially if we drop below T3. But I'm still holding out. T6 is still the final target on this trade. So that would give us probably well north of a 50% profit on that if hit. Next one up, copper. Copper just reached this week hit the price target, T2. We went long right here. I think it was right off the lows. You can pull these up by just clicking on the symbol tag, and then it loads them. Copper trade idea, July 31st. And this is it right here. Right here. So we went long at 27.36, right off that support level. And that was it. We nailed the low like we do on a lot of these trades. Bottom picker, top picker. Sometimes you try to catch a falling knife, you get cut. And if you don't, they could be very profitable trades, especially if you just stops on the other side of it. You had an uptrend line support and price support. And then my style. I don't get greedy. I'm not going to try to wait for the last 1/10 or 0.2% to get exactly that level. Why? Because if I see it, I know other people are looking at it, and sometimes buyers will step in early. So we stepped in. I'd rather get in a little early, go through a little drawdown than to miss a turn like that. In that case, it turned right when we got in, right at the lows. And so a few days ago, we hit our price target. It wasn't a huge trade. I was only looking for a bounce out of it back to the 200s and that T2 level. So that's hit. So I'll remove copper later today. I'll go back in, trade ideas, active trade long, and that one's officially completed. Now it can go up if you like it. Just set a stop wherever your entry was. Trail stops up, but that's it. Some trades I call them bounce trades. I see a reflexive level. There's likely to be just a reflexive bounce. I don't like the chart long term. And I have no idea where the stock's going from here. That's the other thing I'll do. I'll give you my best when I have an opinion on a trade that I'm exiting, or if I'm entering a trade or in a trade. I'll let you know my convictions, whether they're strong, not strong. And copper, I just, like I said, we get our target, get in, get out. That's it. Lithium, LIT. Oh, I already covered that. I don't know how that happened. All right, lithium, where was I? Active trade longs. Oh, okay. Did I start on ACN? Maybe not. Somehow I missed that. ACN, I still like this one. This was a play at long-term support right here. Would have highlighted it here-ish. Went up. We are just kind of like the recent trade on the stock market, but it hasn't stopped out. It hit our first price target to the button. There's an example. We went long. Let's see, where did we go long? I don't know. ACN. Click on it on August 6th. So we bought it at right above that level there, just above the long-term support level. And arrow break denotes where you're going to have a likely reaction. So that means you can take profits, buy back in on a pullback. And we bought right there, right above the trend line. So I can move over here to grab. And we hit almost to the button. Looks like right on it, about a quick 7% pop. Expected reaction, but this marginal new or almost equal low has even bigger divergence on it. And so now we need to take out this trend line to pop it. We've already hit T1. Now it's still resistance. In fact, guys, it's better resistance now than before I even thought it was resistance, because we had that reaction since. So that now more eyes are going to see it. So we still could have another reaction there. Maybe we get a little W pattern going. Either way, it's already been hit and checked, so that opens the door, increases the odds that we're going to break it, even if we have another reaction off it. And so another way for me to say that, I don't care to sell the next hit of T1. I'd rather ride out a pullback or wait for a breakout to add to it to open the door to T2. And if the stock market's still holding up, then potential T3 will be it. You'll have the 200 days coming in around there. And that's going to give us from where we're at right now, and that's also where we took it last time. If we hit T3, you're going to make about 20%. I can almost guarantee you if it does that, you're going to make probably 4 or 5 times what the broad market will do over that same period of time. But it's one of many trades, and that's what stops are for. So, and on a stop, if I don't list a stop, then just the default's usually about a 3-to-1 RR. So if you're looking to make 20%, just put a stop down there about 6-7%. I wouldn't give it even that much room. Give it about a 6.5-7% stop, somewhere around there if you take it. Because again, and maybe not even that much, because the whole point is we're buying it at long-term support. I want to see it hold that support, and we're still right on that support now. So next one up, trade ideas long. Copper I already covered. Etsy, did I cover Etsy? ETSY. Nope, didn't cover it. This one, we went, I don't remember where, you guys can check them. This was our first target zone hit, pulled back, hit, made a divergent, hit it again with a divergent high that time. And then, as I mentioned, there was some, the de minimis trades. These are a lot of those affected by the de minimis tax. That's on goods coming in primarily from China, but other countries under a certain dollar amount weren't exempt. So your Temus of the world and Etsy's were affected. That news took it down, but we basically, remember, this is a powerful base bottoming pattern here, and I really, I like this company fundamentally. I told you guys, my wife and I buy from this company quite a bit, and it's like the Amazon of niche sellers. You want, instead of generic stuff, you want to find a unique gift for somebody with individual artisans that make, whatever it is. Yeah, Etsy's your place to go, and be surprised. Prices are good on a lot of that stuff. And that's it, guys. This is took out the 200s there. You know how often I talk about these 200 days being great trend indicators, and then you're in a bear market. You short rallies back to the 200s, you short rallies back to the 200s, you short rallies back to the 200s, or you know, if you're going long bear market rallies, you go up to the 200s. Once the 200s are taken out, that's bullish. And then what do? You buy pullbacks to the 200. You buy pullbacks to the 200s. All right, you get the drift. And so if the market is going to go up for the rest of the year and into next year, this stock has a lot more, way more upside, in my opinion, than even Nvidia, which everyone loves. And again, if it doesn't, the stock market craps out. Well, guess what? Consumer spending is going to collapse. I'm going to get to XRT in a second, and you know, Etsy's going to suffer there. You know, if the jobless rate continues to climb and people are out of work and they're not going to buy as many, especially kind of niche gifts like you get on Etsy. You know, Etsy's more, I would probably put this in the category of disposable income or discretionary income. You have consumer staples, which are things you need, like toilet paper and toothpaste. And then you have consumer discretionary, things you want, the big 85-inch TV, you know, luxury items. And so, again, so that'll go into my, you know, analysis whether or not, you know, I'm going to be holding out for T3, 4, 5 or taking, you know, getting out of this one earlier. All right, next one is ICL. Okay, so when I click on ICL, what happens again due to the limitation of my tagging system? Last year, I started getting bullish on the agricultural input stocks, and there's quite a few of them, and they were all covered together in videos. And so these are the ag input stocks. Some of these I like better than others. Some I didn't like at all. I was covering the entire sector. And so, but because I covered them in videos together, most of them, I gave you my favorites, were trade ideas. Some of those have already hit their final target. Some haven't, and I think they have another leg up to come. So I'm leaving these on here for now. Just keep that in mind. When you go in here, they're not all, and nor were they at any point in time necessarily active trades, or at least trades I like. I just covered the sector to kind of give you an idea because birds of a feather flock together. So I'll go over them because they're listed here, just the ones that are in the long trade ideas. So here's one, for example. We hit our fourth target. We would have gone low somewhere. If that was T1, we probably went low off this divergent low or something. I don't know. Maybe it wasn't at the low, but I'm just going to measure it out. So we made on that one about 75% profit. We had our final target. We had negative divergence. And even though it went higher afterwards, look at that exit. Again, this line, this target was given to you way back at the time, and you sidestepped. You were able to, you know, capitalize and sidestep a 21% give back on your profits. And that went right back to the 200-day. Look at this. Again, this is why I'm, you know, some of these trades I'm leaving on as, you know, and I'm bullish longer term on some of these stocks. Again, especially if the market holds up, because what you have here, the 200 days, they were taken out here. The stock tried to regain them, did it for a day, but couldn't hold it. And then boom, 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 just kept getting rejected. And what happened here right after we bought it? Well, recognize the divergent low, trend change. And then what did they do? After our final target was hit, they pulled back to the 200s. They pulled back again. They're on the 200s right now. And so now if they clearly lose the 200s, and I'm not talking a single day and then a reversal, that's going to be bearish. And maybe we're already out of this one. I can't, you know, this one I didn't have, and nor am I going to add any additional price targets. I'm just kind of showing you how these trades, you know, played out. And again, there's still some of these I do like. I'll probably do a separate video or update on all of them. Let's see, LLY. LLY is actually a short, okay, because I gave you LLY. I'll cover that in the short trades. We already hit the first target on day 1 or day 2, but it was a paired. The reason it's showing in the long trade, I paired it with Novo. I said, if you want, you can do a paired trade. Novo and Lilly are the two biggest competitors in the diabetes and weight loss space. They are the, I don't know what analogy you'd use, but and so Novo, you know, we were able to buy right off the lows, you know, down almost 70%. Recently, this one was the biggest, made the, you know, distinctive claim of being the largest publicly traded company in all of Europe. And then boom, that was like the kiss of death when that headline hit. But either way, and so Lilly, again, I maintain, you can keep that paired trade going. I see plenty of upside value in Novo. Again, you can read the previous post. We bought it for based on the fact it had fallen. Great company, 70%. They've got, of course, some near-term woes, like everyone has growing pains. 70% down to beautiful, what I call just beautiful long-term support. I've been waiting forever and a day for the stock to get down to that level, and it did. And so that's it. So these are I gave you, if you're a trend trader and you don't want to game all the little active, pullbacks on the daily charts and 60 minutes, I gave you two targets, T1, which we already hit, and then T2. And now that we've hit, and look at this, again, these targets haven't been modified since the trade was thrown out here off that long-term support. We hit T1. You were able to sidestep a double-digit pullback, as I mentioned, and then now we've taken out that level, and we're coming up. If we take out this downtrend line, it's going to increase the odds we hit my second price target. On the daily chart, again, this is micro, whatever you want to call it, micro targets or whatever. T1 hit, T2 hit, T3 hit, T3 hit there. I'm sorry. T1 was where it was. Yeah. T3 was right here. And then I told you we'd probably get a pullback, and that was that double-digit drop. But now we've entered the gap. And there's that big old massive gap right there. And now we're clearly inside that gap. Heading up to T5, I do expect a reaction. And again, if that gap, I have it at top at 63.95. You don't want your sell limit order at 63.95. Everyone's going to see that. Now, look, by the way, technically the gap's right here. So what I'll do sometime when I see a reaction near it, that's the level I'm going to prefer. But if we can punch through there, then that's going to, if we happen to go through there. So again, T5 is not technically at the top of the gap. It's at that reaction before it. I just wanted to point that out. I'm going to turn this on for you. And what you can do is, if you like the stock and you plan to hold it for a longer term, just tighten your stops up as you start to approach 63.95, because you may run on through there. They may want a full gap backfill, and that's going to take you up here to about 68.50. All right. And again, the whole premise of this trade was based on these long-term charts. If you've bought Novo before on pullbacks to this primary trend line, well, your returns were in the triple digits from there. This could be a generational buying out, positive divergences and everything else. So there's that one. All right. Sugar is another ag commodity. It's been a while since I updated, but I do like it. It's one of the ones that look like more of a bottoming play. There's some that are getting frothy, like the cattle, and we had eggs get crazy a while back. I've never traded egg futures. I don't even know if they have it. I guess they do. They futures for just about everything, but cattle, OJ, you name it, just about anything that comes in a futures contract at one point or another, I've probably traded it. This is Kane. That support coming up on the decent support. Just big divergence building. A lot of these ag commodities, again, bigger picture, guys. I've made the case many times over that this isn't subjective. This isn't my opinion. It was fact. We were in a bear market that ended when COVID hit. And by every metric and technical analysis, we are in a new bull market as defined by, this is a weekly chart, higher lows and higher highs. So this is a corrective wave back to support. If it goes any lower, and it could, then you have the next support. Oh, no, that's it. I just added it. We're there. I didn't even see that we were down that low. That's the previous reaction highs there. And so this is support. And look at that. Nice positive divergence for the first time in a while. You had negative divergence at that high right here. And so that's why even in a bull market, this is what we've been doing for years. Even a bull market, look for these divergent highs, just like we have right now in the stock market. And divergence in itself is not a sell signal. What's a sell signal? Oh, break of a trend line, a wedge, bearish rising wedge. What's a buy signal? A break out of a bullish falling wedge. That's there's your downtrend line, but the wedge would come in on the daily chart to see it a little tighter. You'd probably have that right there. So let me toggle back to the daily chart. Yeah, that's the one right here. Need to pop that. And then there's that secondary trend line I just gave you on the weekly. Certainly a target. That would bring up sugar, the sugar ETF here, about 15-16%. Alrighty, next up. I need to go a little faster here. I realize this video is going longer than I thought. I didn't think I had this many great ideas. UPS, still like it here. It's at long-term support as well. Very good long-term support. It's not doing much, but I like it. It's a very constructive chart. And you have the price targets, and there's no update. Positive divergence, my kind of chart. Again, this is UPS. This isn't some Mickey Mouse, new company that just came public, 3 weeks ago. This is an established company. Had its growing pains for sure, and plenty of layoffs and contraction lately. And sooner or later, that'll, play out for cost savings and be priced in the chart. But I don't care about the fundamentals. I do. I'll read them, listen to them, and this trade is based on the technicals. The case has been made, and again, you can, if you want more, just click on the UPS link there, and you can go back and hear me talk about it in videos. Wheat I already covered, soybeans I already covered, cane I already covered, corn I already covered. Cane is sugar. That's a sugar ETF. FMC is another one of the ag input stocks. Let's see if that's one of the ones. Oh yeah. Here's one that didn't pan out. This is why I told you back then last year, this is a sector that I take a shotgun approach, kind of like the pot stocks, or I'm engaging those because you never know which ones are going to pan out. And there were some I like better than others, but this one, it's kind of meh. Now, if the sector takes off, I think the sector is going to have another, most likely, especially if the market holds up, another thrust up. You've got a basing pattern here. You got the 200s. It kept getting rejected at the 200s here, and once it took them out there, so boom, big level. I mean, big level, about $45. Set an alert. If it takes out 45, which is the top of that recent trading range, it's also going to have taken out the 200. It's going to shoot right up here, here, and then here. All right. IPI, that's another ag input. That was one of the ones I did like back then. And we hit, again, we were buying these back here, somewhere off this divergent low or somewhere in there. We hit my first, second, third, and fourth target. T4 was a zone. We hit the very top of the zone, almost to the button. Again, you can see that. It was created back in 2024. And we hit it so many times right there, and then pulled back, and we pulled back to support my former first target. So if these guys are going to get another thrust up, you want to see if we get a little downtrend line pop there, and then boom, head on up, and the same targets hold true. These would be your next targets, and then my final target. So that's why I'm leaving that one on for now. This one is in. Say what you want about it, but you cannot really argue that it's not in an uptrend since this low, because this has been a series of higher highs and higher lows. It's not the most powerful uptrend, but it is an uptrend. So that's why I'm leaving those guys on for now. Lulu, you need to get going. I still like your chart, but it just, it just keeps getting beat up. But I still, again, this is a brand name. My wife loves this Lulu stuff, workout clothes. They've expanded into men's. I very much like this. I just want to say that, yes, it's, I've been liking it since here. Had an big beat on earnings. That to me looks like what we call a selling climax. When you have an extended prolonged downtrend, then there's a final big swoon down on high volume. That's what's known as a selling climax, as the name implies. Climax is the end of something. It's when people puke up. They just can't stand to take the pain anymore. So the weak-handed longs puke up the stock. And now you have a new set of holders, iron fists, if you will, that are going to hold that stock. And so I very, very much still like this one. I would retest the targets now. I'll tell you right now, there's a big old gap to be backfilled. But this would be just if you wanted a sold target. I think it's going to get in that gap, backfill it. And you're talking 22% just to that level right here. So I'm going to just put next target, or again, these are still the old potential targets. We already hit, by the way, this was a profitable trade. It already hit T1, and then it reversed from there. So I'll just say next target. And then what's today? 9/18. So when I revisit this, remember we covered that in a video. And there it is. So I like this one. All right. Nat gas I already covered. Soybeans I covered. Sugar, that's sugar futures. VIX is going to go up and down with the stock market. I've covered that quite a bit lately. And the stock market, if the indexes get rejected, they're below those trend lines they give you on the 60-minute chart. Today they're up, but they're going to have to get rejected, or the VIX is just going to stay probably where it is. I see minimal. I still think the RR is very nice. I just need to see it. This is still post FOMC noise. This is only day one after the Fed. Let's see how today and tomorrow closes. But I would hold off. I would wait to see a reversal in the stock market right now, even though you can make a case to short the equity indexes. And if you can't, by the way, if you can't make a strong case to short the equity indexes, you shouldn't really buy the VIX. The RR was good leading into the Fed meeting. I told you that. And it's, down. I'm looking, VIX futures are down 1.84% right now. So that's flat for the VIX. That's like a no move. So I maintain what I said. I think the downside's minimal. But if you want to get that timing right, wait to see a rejection off these back tests of the indexes I told you about. All right, wheat I already covered. That's wheat $, the continuous contract, ZW's wheat futures, CF. One more, the ag input stocks. Let's look at that one real quick. And this one, again, hit our first price target here. We had a divergent low there. Went in, put in a divergent high, corrected, but also holding up. And it needs to pop this trend line, and we'll continue on. Still an active trade, still waiting to hit that T2. We're still well above entry, still profitable. It's just taking a while. Again, this is a sector that's going up. It's just not on fire. And if you're patient, and again, it's a way to diversify. Most of these have nothing to do with the broad market. I like these for that reason. It's just another way, because you can have 10 stocks in your portfolio, guys. But if you have Apple, Netflix, Amazon, Meta, NVIDIA, you are the farthest thing in this world from being diversified. I don't care if you have 30 of those stocks. They're all, they're all in this, they're going to move together. They're heavily indexed tech stocks. You're not diversified. This is a sector that can go up in a bear market, and I've seen it do that. It really does, it kind of marches to its own drumbeat. All right, next up, we're almost done. I already covered copper, that's done. Lithium, I already covered. Mosaic, one more, the ag input stocks. That one I liked back then too. And one of my favorites, coming off this divergent low. Again, I don't remember exactly where our entry was, but I know we hit our first, second, third target. When we hit T3, we put in a divergent high. We had a correction. Where did that correction go? You got it. Right back to those beautiful 200-day moving averages. Rejected, rejected, rejected. Bear market, rejected, rejected. But like always, just like the stock market, I'll try to get in early. Sometimes I get in early. I might have been early on these. I can't remember exactly where we entered this one. But then the charts, if you have faith in the charts and you set your stops appropriate, or get out, when you need to, and then get back in. This was a bottoming call, and boom, we took out the 200s. This was the first back test. We just back tested the 200s, and that's why I'm leaving these guys on. And these were the targets that I gave you all the way back, T4 zone. So I would have given you first up to 4 targets back in 2024, and then I added this potential one. So obviously we need to take out T3, 3740, and then I'll open the door to T4. And then I'll let you know at that time when I say potential, sometimes I'll remove the word potential if I think there's a good chance we're going to hit it. And if so, just up to our next target, it's about a 23% gain from where we're at, and then that'd be about a 67, or from the lows, about 160%. What happened there? Active trade longs. All right, NTR. NTR is another ag input. Another one off the divergent low. We hit my first, or I guess we went off that divergent low, that breakout. T1, T2, T3, T4 hit. We were close to T5, but we reversed. just need to take out this downtrend line, and yep, you got it, testing the 200-day moving averages as well. So you can make an objective case to buy this one right here. It's not just the 200s on the first back test of them since taking them out or regaining them. It's also that previous reaction low. So there's a entry point right now, and or means maybe a half position now and another half on a breakout, or you wait for a breakout if you don't want to, buy the pullback to the 200. They already bought it up once. We're testing it again. Just below that's a 200 simple. The red line's the exponential, and that 54.14 support. Already covered UNG and the VIX and corn. All right, we're done, guys. Long video. Hopefully you find it useful. And again, even though some of the ones I went over weren't in here, it's not all inclusive. So if there's anything I missed that I need to update, I'm constantly pouring through the charts, and I try to update the trade ideas when actionable. If there's something that I've highlighted and I haven't made an update, sometimes I'll fall off my radar, don't get me wrong, but then sometimes there's just no relevant technical developments to note at that point in time. But if you want an update on anything, just post it in the comments section. I'll get back to you as soon as possible. This has been Randy Finney with Right Side of the Chart. Have a great day.